Check, please.
Welcome back. Well. Ford is doing incredible. That Lightning looks incredible. We're going to talk about it right now. We will show you the financials and the stock analyzer tool in our software. We will show you what you should be paying for this company moving forward and look at the numbers. I will bring your questions about Ford to Paul and Mo. These guys manage $100 million. You should listen to them because they make that cheddar. Paul, get after it.
All right, thanks very much, Seth. So first off, guys, follow us on Instagram. Everything Money Investing is our new Instagram account. It's going well. And then also follow Seth, Mo, and I personally. All right, guys, so here's our Everything Money software. We're going to do Ford. So Ford, it's very interesting here. Ford hit, how about I go to actual Ford? Ford hit $100 billion market cap for the first time in its history. So it's amazing to me that Ford, and by the way, I'm the fool who bought Ford at 6 and then sold it at 12 or 13, thinking it hit my price target. Ford hit $100 billion market cap. So this is a company that's actually outperformed Tesla in the last year. I believe it has. Why is that? Is it disruptive? You know, it's funny. Kathy Wood comes out and says this makes no sense. Why would Ford be such a big stock gainer because of its EVs? I think it's ironic that Kathy Wood, of all people, is saying that something doesn't make sense. But either way, so Ford, if you look at the max chart, now the funny thing is their stock hasn't hit an all-time high of it, but their market cap has, which means they've issued a lot of shares along the way, which has caused, so that's how you get the market cap being higher, even though the stock isn't at an all-time high. There must be way more shares today than back here. We can go verify that, but I'm just telling you that's why they hit $100 billion market cap for the first time ever. All right, so here it is, $100.6 billion. First pillar in our 8-pillar analysis. We want the 5-year PE under 22.5. This is 33.44. That's an X. Pillar number 2, we want the return on invested capital greater than 9%. The return on invested capital sees how good are they at getting a return, a cash flow return based on the way I calculate it, on the money invested in the business through debt and equity. Right over here, 6.7%. That's the great thing about our software. For those of you who are new, we have a lot of this data on the main page. So far we have 2 X's, all right? A couple things, barely any dividends here, but they're free cash flow. The last 5 years, their average free cash flow was $11 billion, and last year was $10.8 billion. Okay, not bad. But so far we have 2 X's. Pillar number 3, we want revenue growth over the last 5 years. So we go to our income statement on our software, scroll down a little bit to pull it up, 154 down to 134. So that's an X, okay? Guys, look at Ford's revenue over the last 10 years. It's basically the same. Basically stagnant. This is not a fun, exciting, growing company. It's just Ford. It's a pillar of the American economy, all these things. So pillar number 4, we want the net income growth. We want to see net income growth in the last 5 years. So we scroll down a little bit. 5 years ago, $4.4 billion. Last year, $2.87. So another X. Okay. Look at 10 years ago. They made 17.7. They had $11 billion. They had 7. The car business is a tough business. There's going to be a lot of ups and downs on profit revenue. I think the best thing to do with the car industry is to look at long-term trends in their profitability and revenue. Pillar number 5, shares outstanding. So guys, we want shares outstanding staying the same or going down because we don't want to be diluted as owners, right? We want to make sure that the company is rewarding us for sticking with the company by giving us a larger percentage of the company as time goes on. There are other morons out there who think that issuing shares increases the market cap. That is absolutely false. That's absolutely false and stupid. If you believe them, you should be shot in the face for being so stupid. We need to eliminate your genes from the gene pool in this world and start getting rid of morons like you. All right, so we go to the very bottom of the income statement, $3.97 billion to $4 billion. So that's another X. Have we had a check mark yet, Tim? By the way, it's only me today in the studio because we have a Snowstorm Lily or Snowstorm Izzy. Is it Izzy? Snowstorm out there, and Tim drove from 45 minutes away. It took him 2 hours to get here. I was 20 minutes away, but it still took me, about 45 minutes, 50 minutes to get here, and everybody else got stuck. So unfortunately for YouTube celebrities like me, I got to come in and really give the people what they want, which is their Tim, I love this. This is Tim and I. It's so fun. All right, pillar number 6. What this has to do with is debt. What we want to do is we want to see the debt of the company and see if it's manageable. So the way I do it is I go to the main page back to our metrics page, I take our 5-year average free cash flow, $11 billion, okay? I multiply that by 5, $55 billion. We want their total long-term liabilities to be under this, under $55 billion. So we go to the balance sheet on our software. We scroll all the way to the bottom. Total long-term liabilities, $127 billion. Another X. We have not had a check mark yet on Ford. Okay. The last two pillars have to do with cash flow. Guys, free cash flow is the lifeblood of the business. It's cash from operations less your capital expenditures, and you can do one of 5 things with that. Pay dividends, buy back shares, pay down debt, make acquisitions, and reinvest back in yourself, okay? These are the 5 things. If you don't have free cash flow, I don't know how you're paying yourself out. So we go to the free cash flow statement, and I don't know why it's looking like that, so let's go to the annual one. Cash from operations, less your capital expenditures right here. And your Uncle Paul and Uncle Tim have put this in here to make life easier for you. We added this line right here. 12.86 to 18.5, check mark. And you saw before, it was a little bit different. This is based on the full year. The last one was based on the previous 12 months. There is a difference between the two, but either way, we have a check mark there on this portion. And the average is 11.94. Our last pillar is we take that 11.94, we multiply it by 20, and that's $224 billion, I believe. Compared to the market cap of $100 billion, this is a check. It means we were willing to pay $224 billion for the company, but the company is selling for $100 billion right now, check mark there. So the last two pillars were check marks according to the annual numbers, but on the last 12 months, let's see if they were. They were also as well. All right, so guys, the price of free cash flow is very, very low on Ford. Very low. I don't know why I see a big difference between PE and price to free cash flow. It shouldn't be this big of a difference. So that's automatically a, wonder why that is. Now, is the company worth it? Well, that's the next step. We're going to use our stock analyzer tool. This has become one of the most important parts and most popular parts of our software because what it does is every investment is the present value of all future cash flows, right? If I were to give you $1 a day for the rest of your life, there's a certain amount of money you're going to be willing to pay for that because you have to take an assumption of how long are you going to live? How much that dollar can be worth 20 years from now when there's inflation, et cetera. So the stock analyzer tool allows you to take all those future assumptions, bring them back to today and say, based on those future assumptions, this is what you should pay for the company today. So let's go to the stock analyzer tool. All right, first thing I'm going to do is pick number of years of analysis. I always pick 10 on companies that think that I'm trying to do a long term. I want to own this company for a long time. And Ford has been around for well over 100 years. So I'm going to pick 10-year analysis. Revenue growth. All right. So this is where we make our assumptions. Let's assume -1, 1, and 3% revenue growth. And the reason I picked 3 on the high side is EV. They were nowhere in the EV market, basically. Not nowhere, but they didn't have much. And now they're starting to get back into it. Now they're starting to get into it and start to compete with other companies. So I'm going to go high side 3% revenue growth. Profit margin. God, their profit margin looks pretty abysmal. So let's go with 2, 2.5, and 3. Actually, let's go 2, 3, and 4. All right. Free cash flow margin. Let's go 6, 6.5, and 7. PE. Let's go 12, 14, 16. Price to free cash flow, 12, 14, 16. And always, guys, for my desired annual return, I always do 12.5%. And the reason being is, if you can invest in an ETF and get 9 or 10% return a year, to go invest in an individual company, go get that margin of safety, buy it for a discount, 12.5%. The more return you want, the lower the price you pay. So with the analyze button. Now I want to make note, guys, you saw the difference between PE and price to free cash flow here. So there's going to be a very big difference in the values of these companies based on the cash flow and the PE ratio. So just keep that in mind here. But we hit the analyze button, scroll to the bottom, and here's the deal, guys. Only one price out of all of them comes at a buy today because the company is currently at $25 a share. Only one time. Basically somewhere in the middle here, I sold at $12 or $13 a share, and guess what? That's on the low end of the mid assumptions. So remember, guys, this stock analyzer tool is all about putting in your assumptions for the future and telling you what you should pay based on that, right? We don't know the future. We're always going to make assumptions on them. And that's the whole point of this.
If this speaks to you, you can have this software behind Paul. You can have it on your phone and impress friends at parties because you know the financials of these companies. Paul, tell them how, baby.
And the reason we created all this software is because as we made videos of the company, people would reach out to us and say, hey, how do I analyze my own companies in order to do the analysis versus waiting for you guys to make a video? So we created a software. You get everything you saw here. You get everything on the main page that's also coming soon, right here to the right side. You get 30 years of financial data. You get access to Seth Moe and I in our exclusive Everything Money chat here at the top, EM Community Chat. You get the Stock Analyzer tool. You get Real Estate Calculator, Retirement Calculator. You get 8-pillar portfolios, which allows you to put up to 50 stocks in a portfolio to tell you how all 50 companies do at once, or 20 companies, doesn't matter. But exclusive daily content. We make 1 to 3 videos a day that we post. They're called A Few Good Minutes. They're wonderful. Seth Moe and I make them. But most importantly, guys, is this EM community. We have over 6,000 people that constantly talk in the community about their investment ideas, because the great thing about the internet is it allows all of us who have a certain way of thinking to come together and talk about our investment ideas. We have people in there saying, hey, I'm looking at blah, blah, blah. I'm looking at Ford stock. What do you guys think? And people have a good, engaging conversation about it. This is all available, all in our tool, all of this for about $1 per day. Sign up now. $1 per day gets you all of this. For the price of a cup of coffee, you get all of this, $1 per day. Sign up. And the best part is, whatever you sign up for today, that's your price that's locked in, because the price goes up every single month. But you're locked in at the price you sign up for today. So $1 a day gets you all of this. No-brainer, guys.
That is our take on Ford. We will certainly update you as this price and the stock changes and the company changes. A lot of excitement around their EV products, so we will get after it in the future. Join the community. You will love it. Final thumbs up. See you next video.